Why beginners should start with selling options, not buying. So you've heard about options trading, the wild world where people double their money overnight. Or lose it just as fast. But what if I told you there's a safer, smarter way for beginners to start? It's not YOLOing call options on Tesla, it's selling options. Yeah, selling. And today I'll explain exactly why that should be your first move into options trading. Section 1. The problem with buying options. When most beginners jump into options, they buy calls or puts. Why? Because it's cheap, and the upside looks amazing. I can turn $100 into $1,000. But here's the reality, over 75% of options expire worthless. That means most buyers lose money. It's like playing the lottery, but with more Greeks and fewer winners. You're betting the stock moves a certain way, fast, and within a short time window. And when it doesn't, boom, your option goes to zero. Section 2. The power of selling options. Now let's flip the script. When you sell options, whether it's cash secured puts or covered calls, you're the casino, not the gambler. You're getting paid up front to take on a trade that has a high probability of success. Think of it like this, option sellers win more often, because time decay, Theta, works in their favor. Every day that passes without a big move, you're making money. It's like renting out your stock or getting paid to wait to buy it cheaper. Section 3. Why it's perfect for beginners. Here's why option selling is perfect for beginners. Predictable profits, you know your max gain and loss before entering the trade. Time is on your side, each day that passes increases your odds of winning. You can be wrong and still win. The stock doesn't need to skyrocket. It just needs to stay above or below your strike. You learn market behavior. Selling options forces you to understand probabilities, volatility, and risk management, the real skills of pro traders. For example, sell a $100 put on a stock you want to own. You get paid, say, $200 up front. If the stock stays above $100, you keep the cash. If it drops below $100, you buy the stock at a discount, plus you got paid to do it. Section 4. Low risk doesn't mean no risk. Now look, this isn't risk-free. If the market tanks or volatility explodes, you can take losses. But the key difference is, you're not swinging for home runs. You're playing the long game, consistent income, high win rates, and smart position sizing. Section 5. Starting strategy. Are ready to dip your toes in? Start with cash secured puts on quality stocks you'd be happy to own, covered calls on stocks you already hold. Use 30 to 45 day expirations and target 20 to 30 delta strikes. This gives you a solid balance of premium and safety. So if you're new to options, skip the hype, skip the lotto tickets, and start with selling strategies that actually work. You get paid up front, you control risk, and most importantly, you learn how to trade like a pro, not a gambler. If this helped, hit that like button, subscribe, and drop a comment with your first trade idea, or ask me for help getting started. Catch you in the next one.